QuickBooks Pro Plus Desktop 2022, enter payroll for the second month. Get ready because we bookkeeping pros are moving up the hilltop with QuickBooks Pro Plus Desktop 2022. Here we are in our Get Great Guitars practice file, going through the setup process with the view dropdown, the open windows list on the left-hand side, company dropdown, home page in the middle, maximizing it to the gray area. Going to the reports dropdown, company and financial, taking a look at the balance sheet standard, customizing it up top with the range change from 010122 to 123122. Fonts and numbers, changing the font size on up to 14. Okay, yes please, and okay. Reports dropdown, company and financial, profit and loss, range change from 010122 to 123122. Customizing that report, fonts and numbers, changing that font size on up to 14. Okay, yes please, and okay. Reports drop down one more time to the accounting and taxes with the trial balance and a range change from 010122 to 123122. Customizing that report with the fonts and numbers, changing that font on up to 14. Okay, yes please, and okay. We're going to be entering the payroll now for the second month of operations. So we'll enter the payroll transaction. If we go to the home page, then we're looking at this item, pay the employees, remembering that payroll is going to be an add-on feature. Typically, we're using the manual payroll here, which is a great tool for practice because it allows you to basically calculate and think about what the calculations are for the withholdings, but it's not something you would typically want to use in practice, given the fact that although each of the withholdings are not too difficult to calculate in and of themselves, when you put all the withholdings together and you got to calculate them per employee, then calculate the aggregate as well, you got to calculate it on a check-by-check basis as well as an aggregate basis on a year-to-date basis. There's a lot of room for errors, and having the double check of the software is nice. So there's different ways you can turn it on, or different levels of payroll that you can pay for within QuickBooks, or you might choose to get payroll from someone else if you're paying the added payroll, a payroll provider, for example, like an ADP or a Paychex, in which case they would be doing the payroll there. You'd still need to be entering the information into your system. Therefore, no matter what you do, you're going to be stuck with payroll in some way, shape, or form when you're looking at the bookkeeping if there's payroll within the company, often an area people don't understand. So if you understand the accounting behind it, it can be a useful skill. So we turned on the payroll by going to the Edit dropdown down to the Preferences, and then we turned on the payroll on the left-hand side, Company Preferences, turned on the payroll. We got the manual payroll on here, so that should be free for the practice problem purposes. Closing then this back out. As we enter the payroll, we would expect, noting that the next thing we did when we set up the payroll, by the way, was go to the lists dropdown, and we set up the payroll item lists, possibly not exactly this way, but you can see that these are going to be the payroll items that are going to help us to calculate the payroll. We also need to determine how often we're going to be paying people, what's going to be our payroll cycle. Is it going to be monthly, weekly, bi-weekly, semi-monthly, and so forth. Once that is set up, then entering the payroll can be fairly straightforward with just basically entering this transaction. When we do that, we're imagining actually the generation of, in essence, the checks, or entering the decrease to the checking account at this point in time. And it becomes a complex transaction because you also will have to be then dealing with the employee withholdings as well as the employer payroll taxes that will be in place and any benefits that will be taken into consideration. So let's check it out. We're going to say pay the employees going into that item. And so this is going to, let's close the thing on the left-hand side, the caret, that thing over there. Let's close that thing out. And then we're going to pay period. So we're going to say the period ends at the 2/28 because we're assuming that we're paying here on a monthly basis. The check date, I'm also going to say, is on 2/28/22. You might not have these two things on the same day. You might say process the payroll at the end of one day and then issue the check some couple days after or something like that, or whatever your system might be. Then we're going to be saying it's coming out of the standard checking account. Also note that it's kind of common that you have another payroll account where you might be putting money into directly the payroll account just to cover the payroll and then paying the paychecks with it. Why would you do that, you might ask? Because payroll can be complex. Payroll's the very likely area that if you have problems that you want to know exactly what you're dealing with, and it's nice to have those checks right in one account. So it might be worth doing or thinking through doing that. Then we're going to not be printing the checks, but we're going to handwrite the checks here. If you were to print the checks, you check off this item, put the actual checks into the printer, and print out those checks. We're just going to do the handwriting for the practice problems. We got our 2 individuals down below. Because we don't have the paid payroll, we're going to have to do some adjustments to them. So I'm going to check them both off. I'm going to go into the Adam Hamilton, which we set up as a salaried employee. So we got the salaried employee calculating up top, but the withholdings down here are not withholdings. So let's calculate those. Now I'm just going to estimate the withholdings for the purposes of the practice problem. I'm not going to get into the added tax here for Medicare. I'm just going to calculate the Medicare down below. So I've got the federal withholdings. These are going to be dependent on, this is, by the way, not our taxes for the company. This is the employee taxes, the things that we're going to report on their W-2. And if we typically get it right, then we're going to get the information from the W-4 with the marital status and whatnot, what their withholdings are. And then we have to look at the tables. This is where it's good to use software. Software is helpful to calculate this. And then hopefully when they file the 1040 at the end of the year, they'll get a refund because we try to shoot to overpay, typically is how the whole system is in essence set up to be. So I'm just going to put an item here, which I'm going to say is 720. So I'm going to say 720 for that one. Social Security is more of a flat tax. So this is one that will change with time. So 4583.33. In other words, I should say this is one that is going to be tied out with a flat rate typically to the salary, although it does get more complex than that because there is a cap on it as well. So I'm going to multiply times 0.062, and that's going to give us our 248.17. So I'm going to say 248.17 on that one. Notice the year-to-date numbers are populating on the right-hand side. That's necessary for multiple reasons. One, I got to report it for human resources purposes to the employee on a paycheck stub or in some electronic way if you're given some type of electronic transfer. And these caps, then, I need to see what the aggregate is to hit the cap. So if they hit the cap for like the year-to-date Social Security, then that's going to have an impact on the Social Security calculation for this particular paycheck as well. So then the Medicare, I'm going to take the 4583.33 times 0.0145, and that's going to be about 66.45, so, or 66.46, let's say. And so there we have it. So the full amount they earned, $4,583 minus the withholdings, gives us the net check that they're going to get. And then we have our payroll taxes, which we're going to match down here, which is going to be the 248.17. Medicare is about that 66.46. I'm not going to populate the federal unemployment taxes for the purposes of our practice problems. What will this do when we populate this or record this? It's going to then record the expense of the $4,583.33, even though they're not going to get that amount. The other side, then, what they're going to get, decrease in the checking account by the $3,548.70, and then the liability is going to be going up by these amounts, which I think we just put into one liability account. You could break them out to 3 liability accounts or 2 liability accounts for payroll tax liability for these amount that we're going to have to pay in the future to the government. Note that in practice, you might have state taxes as well. It will be dependent on the state that you're going to be in, local taxes possibly, and benefits, which would act in a similar way. The benefits, of course, being voluntary, whereas these are involuntary type of actions. And then we have our taxes on this side, which are going to be going, we've set them going to the payroll tax expense, these being payroll taxes, not part of the wages over here, whereas these being taxes, but not our taxes. They are the employee's taxes, therefore we record them as payroll expenses. These are our taxes that we, for some reason, are forced to pay on the wages, not our wages, but the wages that we paid to the employee, that we had to pay then taxes on the wages that we paid to the employee. So we're going to increase the payroll taxes for them, other side going to the liability. Let's do the next one. Save and next. So the next employee. So now you got the 2 different employees. Remember, you can think of this transaction in total as if kind of they were one employee with regards to a journal entry, which is how you might enter it into the system if it was to be done by an outside company like an ADP or Paychex. And then we can think of them as a paycheck by paycheck, having a similar transaction for each one, which is how it's going to be showing up when we run the payroll through QuickBooks, which can be quite overwhelming because it becomes a lot of data very quickly. So we're going to keep it at the 15. So 160. So we got the 2,400. So let's keep it at there. Let's keep it at that. And then we're going to say that the hourly, the federal taxes, I'm going to say are 360. Those are the ones we'd get from a table. Those are the complex ones. And then I'm going to say that we have the 2400 times the 0.062. We're going to say that the Social Security is 148.8. And well, hold on a second. 148.80. And then the Medicare, I'm going to say is the 2400 times 0.0145, which is going to be the 3480. So this is going to be 34.80. So that means that they're going to get 2,400. That's how much they earn. That's not what they're going to get. Then we're going to take from them the 360, the 148.80, and the 3480 because we're required to by the government. And they're going to get the 1,856.40. Then we're going to have to pay in the future in matching for the Social Security at 148.8 and the Medicare at the 34.8. And then I'm not going to get into the unemployment at this point. So for this employee, we're going to have a similar transaction with different numbers on a check-by-check basis. What's this going to be doing? It's going to be decreasing the checking account by the 1,856.40, but it's going to record the expense for the payroll expense of the 2,400, the difference going to the liability, those being their payroll taxes, not our taxes, even though we're the people that the government is forcing to be their tax collector. We're the tax collector. I didn't apply for this job, but I have to do it if I want to run my business. And then down on this side, we have our taxes that we're going to be paying over and above on the payroll taxes, which is going to increase the payroll tax liability and the payroll tax expense. Let's save it and close it. So now you got those two items that you could think about the full journal entry in aggregate between those two employees. Let's continue. Everything looks good. Does everything look good, people? Let me know if you see anything wrong. Is anything wrong? Okay, I'm going forward. If anything gets messed up, it's your fault. So because we're going to say create the paycheck. Let's do it. So now we have created the paychecks. I'm going to close this back out. Well, we could look at the paycheck stubs. If we look at the stubs now and say we want to preview it. Where's the preview? Preview. And there we have it. So now notice we got the current information. These are information you've probably seen similar to this. And then we have the year-to-date information. Again, remember that it gets quite complex when you're talking about multiple employees, multiple different current and then year-to-date transactions for each employee. And then you've got the caps that are going to be involved. And if you get into different type of benefits and whatnot, it gets quite complex fairly quickly. So let's close this back out. Let's close this back out. Let's close this back out. Let's open the caret on the left-hand side. And I usually like to see it on the actual register. Sometimes I'll go to the lists drop-down to do that. The chart of accounts. If we take a look at the checking up top and double-click on that going into the register, there's our two paychecks indicated with a little paycheck thing. And if you click on the little paycheck thing, then it takes you to the paycheck detail. And if I click the paycheck detail, we get to the detail of the paycheck. Now, note you don't usually want to be adjusting paychecks, so you can't like change them. You have to void them normally if you want to make a change and process the payroll again. And then we can go to the trial balance and see what happened here. What happened? We've got the checking account went down. Double click on the checking account. It went down by the net amount of the paycheck for Adam and Erica. So that's the net amount. And then if I close that out, the other side went to the liability for payroll expenses. Double click in the payroll expenses. And we've got the paycheck down here for Erica and Adam. Let's take a look at Erica's this time. And if I check that one off, that's for the total earnings. You can see, not the net check. The difference between those two, closing this out and that out, went up top to the balance sheet or balance sheet accounts. I could scroll up because I'm in the trusty TB trial balance. And we see that we got the liabilities for the payroll. Where are the payroll? There they are, right there. They're right there, right in front of your face. You can't see them. So there we have them. So now we've got the payroll liabilities. Now, on the payroll liabilities, we have both we got the federal income tax withheld, and notice we got the double up on the Social Security and Medicare. So and they recorded it for each employee. So you got the federal and the Social Security and Medicare doubled up. That's because it's got the employee portion and the employer portion that are accumulating upward on this side. The other side's recorded in the expense for payroll tax expenses, remembering that this payroll tax expense doesn't include the withholdings for payroll taxes that we took from the employees, because that's included in the expenses for payroll, because those are the employees' taxes, even though we are the ones that are required to withhold from them. That's often confusing to many people. If you can understand that, you might be, that's valuable oftentimes in many accounting settings. So if you go into here, you're going to get the payroll information, which are the actual taxes that we had to pay, which in this case on the federal side would be the Social Security and Medicare that we matched, and the federal unemployment tax if we had to do that, but we didn't record any in our practice problem. So there we have those items. If you were to look at it on the balance sheet and the income statement, here would be the balance sheet. The checking account was affected. We had in the liability side of things, the payroll liabilities were impacted as well. And on the income statement side of things, the good old P&L, profit and loss, we broke out the payroll between the payroll taxes and the payroll expenses, which is quite common. That's useful to do because at the end of the quarter and at the end of the year, you might want to then tie out your 941s, your quarterly 941s that you got to file, and your 940 at the end of the year for federal unemployment, and your W-2s and your W-3s. And it's useful to be able to do that if you break out the earnings versus our taxes, so you can kind of tie those things out and double check that everything is going the way everything should be going. So then you can, of course, also take a look at this with regards to the payroll reports drop down. If you take a look at the employee payroll activity, payroll summary, the most common report, changing the dates from up top from 01/01/22 to 12/31/22. Now we've got our two employees. Now remember, you can look at this report as if like paycheck by paycheck, or you can kind of look at it as a total. This is a report that would be similar to a report that you might get if you had a third party like an ADP or a Paychex giving you the information, where you might look at the total and enter the total into your system with like one transaction, one journal entry or something like that. So in other words, I can see this as an aggregate as the adjusted gross pay total, the 13,966, the withholdings down here, and then the net pay. That's the net that impacted the paycheck for the two employees for the full pay period, the 2 months. And then we've got the employer taxes and contributions. So if I was to look at the gross pay, the 13,966.66, that should tie out to the profit and loss for the two periods, the 13,966.66 for the two earnings, or the two payrolls that have happened thus far for the 2 months. And then if I go back to the payroll summary, that should also, by the way, most likely be what you would find on the W-2 or the W-3 form. And then on the W-2 thus far, if it was just for this 2 months, you would think that these two amounts would be on the wages, the total wages in general, unless there's going to be items like a 401k plan, or, they can complicate the different wage brackets, but in general. And then down here, we've got the withholdings, which include the federal withholdings, which of course would be the amount that would be the withholdings for federal income taxes, and then the Medicare and the Social Security. So that's going to give us the amount of the withholdings, the $3,132.46. And that should be what we have thus far, because we haven't paid off even month one's withholding. So $3,132.46 on the balance sheet. So if I go to the balance sheet and I take a look at the withholdings, we're talking payroll liabilities are at the 4,104.92, because it's also going to be including the employer side of the withholdings, which is the 9,972. So in other words, if I took this 3,132.46 plus the 972.46, which we haven't yet paid either one of them, we get to then that 4,104.92, 4,104.92 there. And then the payroll taxes on our side, This also should tie out basically to the expense for the payroll taxes on our side of payroll taxes. If I go back to the profit and loss, we've got the payroll taxes, the 972.46. So you can see how that would basically tie out when you create your 940s and your 941s quarterly and your 940. You might be drawing primarily from this kind of information. Obviously, QuickBooks, if you pay for it, QuickBooks might help you to populate those quarterly forms in the yearly form. But generally, you could see it kind of how it would draw from basically this information, recalculating the federal taxes on a quarterly basis, which would be the federal income tax, not ours, but the employees that we withheld, the Social Security, the Medicare, both the employee and employer, calculate those items. The year-end 940 calculation of the federal unemployment tax, which would be down here. We didn't record it, but it would be this item. It's usually a smaller kind of tax item, and it has a small cap, so we don't want to get into it right now, but you could see how that would basically be recorded there. And then when you think about your wages for those calculations, you got your wages here, and then of course the year-end forms in the W-2 and the W-3, you could see populated from something like this, which should also tie out. You'd like to be able to match that to your profit and loss, your balance sheet on a quarterly and yearly basis at least, so that you can make sure that your reporting to the government with regards to your payroll taxes matches your reporting to the government with regards to your financial statements, which you're probably going to be reporting to them in the form of a tax return. So here's where we stand at this point in time. If I take a look at the trial balance, you can check out your numbers here, see if you're lining up to the same kind of stuff. If so, that's great. If not, then try changing the date range. It's often a date issue. We'll be doing the transaction detail report at the end, which is a great help to check your numbers. And we'll also be making backup files, so hopefully you can rework some of the practice problems if you so choose with them.